Hi, this is Hyperwave. I'm Leah Wald, and I'm here with Tyler Jenks. And we've gotten a lot of awesome questions about Hyperwave, both from people who want to know some of the basics, as well as some brilliant questions of people that just seem to really get what's going on. So we're going to do a bit of a tutorial today, specifically about the first three phases of the Hyperwave with charts that we haven't shown before. And then after that, we're going to do an in-depth look at today's action in Bitcoin and why we think it's so important. Specifically, what are we at? 8 minutes prior to the closing bell. So, Tyler?
Thank you very much, Leah. And I'm sure everybody that's been watching knows what a great job Leah is doing with Jimmy and Tone on their morning broadcast. We're going to try to keep ours in the afternoon to give Leah a little bit of rest in between. What we're going to do today, mainly because of all the questions we've been getting about Hyperwave. First of all, we're getting a very positive response from people that are saying that it is helping them understand not only technical analysis in general, but specifically what's going on with Bitcoin, which is exactly what we were hoping. So what I'm going to do is I'm going to switch over to a screen share right now. And we are going to start immediately with our tutorial on Hyperwave. Okay, let's pull this one up. And can you see that?
Looks good, Tyler.
Okay, terrific. This is the Bitcoin chart, and I'm going to move away from that right now. The good news is we're holding between 10,100 and 11,100. And those of you that have followed us know how important those two lines are for me. And we will talk about them at the end of this vlog. But for now, let's take a look at this Hyperwave chart of Bitcoin. And this goes back all the way to the $1,000 level. And then I want to bring up the chart that you've seen before of Hyperwave. And then back to the chart of Bitcoin. Now, notice that I have drawn in 3 lines here. And I've been working on this because of some things that some of our listeners have asked about. And I don't have the answers, and we won't have the answers until we see more price action in Bitcoin. But for now, I believe these are the 3 best lines that can be drawn using Hyperwave analysis on Bitcoin. This bottom line is phase 1. This second line is phase 2. And this line is phase 3. Now that's a little different than what I have shown before. I've made some changes and I will show you why and how. I'm going to move back into time and show you why I have put the phase 1 line right at this level, which is just about 1,000. I had not done that before, and the reason I hadn't done it, because when you go back into time, all of those that have been watching Bitcoin for a number of years know that there have been these big spikes in price. This one from $400 up to almost $800. This one from $200 up to $500. And then this giant that took us to 1,000 for the first time, all the way up to 1,163. And we're talking now about the end of 2014. And then as we go back further, there were some very large moves from less than $10 up to $250. Now, each one of these are not hyperwaves. They are similar to hyperwaves, but in each case, we never got all the way back down to the bottom of the move. On this move where we went from $100 to $1,100, we corrected all the way down, so it looks like a hyperwave, but it only got down to 400 and then later to 200 and then finally back to 152. If any of these moves in Bitcoin could be considered a hyperwave, it would be this one that occurred, as I said, back in 2013, 2014. But here is what I have done. Notice this line, which I believe is the most accurate phase one line at 1,000. On 2 different weeks, we broke through that level and then closed below 1,000. On the next week, we went through that level and then we closed below 1,000. 4 weeks later, we came up to the 1,000 area. We did not penetrate it, but then we closed down below it. That led me to believe that all the action prior to the last time we broke above 1,000, right here, at the beginning of 2017, is an accurate depiction of a phase one line. I know there's tremendous swings under that line, but there are no penetrations on a weekly basis above it. So I am going with that $1,000 mark as the phase one line. Now, notice right here, we came up to it in December, on the week of December 25th, 2016. The next week, January 1st, 2017, we broke through it, the $1,000 phase one line, but closed slightly below it. And then for the next 4 weeks, we fell back and gathered strength. 4 weeks later, on this particular candle, January the 29th, 2017, we broke through the $1,000 level and closed right on it. The next week, we went above and below it and closed right on it. The next week, we broke above it for the first time and closed above it for the first time in 9 years on a weekly basis. That's why I believe, because of this cluster, that this is a legitimate phase one line. and it lasted for years.
Hey, Tyler,
Yes.
can you pull back up the chart that you created just of Hyperwave? Exactly.
So what we are talking about, Leah, and that's a great observation, is only this part. And I'm going to show you some charts about phase 1, phase 2, and phase 3 in just a second, where we talk about the length of time it takes to convince me that this is really a hyperwave. So all we're talking about right now is this line, phase 1. But after 9 years of a phase 1 at $1,000, in which you could have made a lot of money buying at 200 or 300 and selling at 800 or 900 or 1,000 and then shorting and going back down to 100 or 200. I'm not saying that. What I'm saying is, in terms of the structure of this massive formation, I believe that what I have just explained is the best way of looking at the phase 1 of Bitcoin hyperwave. Now, right here, I'm starting a phase 2 line. And the reason for that is we came back down to the phase 1 line. And I had a couple of questions by people asking me, what does it look like when a phase changes from 1 to 2 or 2 to 3 or 3 to 4? And this is the perfect example. After breaking up and coming back down and forming a low, and then begin moving back up off your old phase line, you can suspect that you are in for a phase change. And that's exactly what happened. So what I did for this particular line, which is a phase 2 line, is I used this doji candle that's sitting right on the old phase 1 line, and then I wait as the price goes up all the way to 2,900, next week 2,980, and then comes back down and is stopped and then moves back up and continues into an acceleration. And what I do is I use the low point and connect it to the next low point. And it happens to also hit the close of this candle. And even though this up reversal candle broke down through that line, it did not close there. And remember, my rule is a phase line is not broken until on a weekly basis you get a close below it. So you will find many examples such as this, and for a brief time, this one, where during the week, Monday, Tuesday, Wednesday, Thursday, you actually are below that line. It can make you very nervous. But also what you happen to see often with hyperwaves is an acceleration later in the week up from that hyperwave phase line, which is exactly what happened here. And then we knew we were off and running. Now, this to me is too short of a period, lasting only a number of short months, for a phase 2 line. Normally, a phase 2 line is going to be 2 or 3 years long, and I'm going to show you some of that. But what we had was this unbelievable acceleration that seemed to hold above another line, which I call a phase 3 line, even though I don't like it in this case. But that's going to be important later in our discussion why I have chosen these 3 lines. The main one being this candle that we have talked about over and over again, which was the February 4th giant reversal candle that broke through this line and closed above it, and we're still above it today. So with that as an overview, I want to go into the details of each of those phases. And the way I'm going to do it is to give you one more picture here. Notice that I've drawn in a fairly short phase 2 compared to the phase 1. And 2 and 3 are about the same in terms of the length of the lines. 4 tends to be the longest of 1, 2, 3, and 4, except for 1. The 1 can go on for years and years and years before there's any sort of a breakout. But when 2, 3, and 4 start, these relationships are fairly accurate, although there are longer and shorter ones. Okay.
Tyler.
Yes.
So I'm sorry if the mic's not working, guys, in the live chat, just let me know. You're talking about how 1 can be years and years, although we also talked recently about the very short time period that we saw the silver ETF have a mini hyperwave.
Right.
So just very quickly explain that the time periods on the different phases can run from years to short time periods, and as well as you've mentioned before, that they can restart again.
Exactly. There are no 2 hyperwaves I've ever seen that are exactly the same. What this chart basically shows is the average, the mean, the median of all the hyperwaves I've ever studied. But each piece of it can be very different. The rules themselves don't change. And let's take a look at what I'm talking about. Here is the Gbtc hyperwave. And I've already pointed out that this period of time, which lasted from the creation of Gbtc, is all of phase 1. And my best interpretation of this phase 2 is it's still intact, even though we had this tremendous spike up in price. And what I'm looking for with Gbtc, the Bitcoin Investment Trust, is an acceleration to a phase 3 off of this phase 2 line. Now I have 4 points: the beginning point, this point in July 24th, this point in October of last year, October 23rd, and then this one in February of this year, all along this same line. Now what I'd like to do is I would like to first apologize for the next 3 charts, because I had a lot of difficulty figuring out how in the world I was going to draw these using the available apps that I had. This is a phase 1. And I wanted to emphasize that it goes on for a number of years. That's why on a lot of people get excited when they see a short period of months under a flat top, and then all of a sudden a sharp movement out of it. Over the years, I've probably had hundreds of clients make that observation on a number of different securities. I don't consider any hyperwave to be an actual wave. It could be a bubble, it could be a lot of things, but not a hyperwave unless you go for at least 2 or 3 years in some cases 10. And you remember I showed you one that went on for 40 years, which was the US Treasury bond market. Okay, so all phase one is a horizontal line in which the price cannot get above it for whatever reason. It comes up and hits it, and it's repelled. And it tries again, doesn't make it, hits it, and is repelled repeatedly, over and over. I've used examples of 1908 to 1922 for the Dow Jones Industrial Average. The phase one line there was at 100, and it lasted for 14 years. From 1965 to 1982 in the Dow Jones Industrial Average, 17 years, the phase one line was at 1,000 on the Dow, and we could not break above it until 1982. So that is what a phase one line looks like. In the case of Bitcoin, we've gone 9 years below that $1,000 level. Now, the first 4 or 5 of those years, the prices were much lower. But on both occasions, it tried to move up. 1,000 repelled it. That's why I'm calling the phase one line of Bitcoin at the $1,000 mark. This is what phase two looks like. Phase two, all of the price action must be above the phase line. Phase one, all of the price action is below the phase one line. There is no upside limit to the price above phase two, phase three, or phase four. It can go anywhere it wants to the upside. It simply can't go anywhere below this line. And I like to see at least 3 data points along any of the phase lines. But in your mind, picture these peaks tremendously higher and then coming back down and stopping on the line and then taking off again. Perfectly permissible. All this is a restrictive line that gives support to the growth. This is a phase three line. The difference between phase one, two, and three is always the angle of the line. Here we've got a horizontal. Here we've got something short of a 45-degree angle. And here we've got something greater than a 45-degree angle. Now, I'm not suggesting that those angles are necessary. What is necessary is an obvious acceleration in the delta of the lows on the phase line. The delta is obviously the rate of change of this line, its angle up. You cannot have a phase three with a smaller angle than phase two. You cannot have a phase four with a smaller angle than a phase three. That's the whole beauty of this analysis, that once you are clearly starting a new phase, it does not matter how high the price goes. It only matters on a correction where it stops, which means as you get way above a phase line, you can take very large paper losses as you come back down to the phase line. So depending if you're a speculator or a trader or a long-term investor, you can use the phase line as a stop point on a weekly closing basis, or depending on how you're looking at the future, a very powerful buy point because you believe and feel that the phases are going to continue and continually go higher. Leah, did you have a question?
Yeah, fielding a question from the live chat. Thank you.
Great.
You were asked, can a phase 5 end anywhere between top and bottom of phase 2 and 4?
Great question. Let's go back to this picture. What's very important to do is it's important not to stop these lines in your mind or on paper, but extend them. I don't extend them in the model because if you extend 2 and then extend 3 and extend 4, it's very difficult to read the chart. But just know that each of these lines, including the phase line one, runs to infinity. It just keeps on going forever. But in the hyperwave itself, a phase 5 will often drop below the beginning point of phase 4, but not always. The phase 5 will often drop to the middle of phase 3, but not always. I have never seen an example in real time when the phase 5 drops all the way down to the phase 2 line. And I am rethinking that with Gbtc and Bitcoin. And it's never smart to find examples that are contrary to the vast number of other examples as a special case. So I want to be very careful in labeling 1, 2, and 3 of Bitcoin. And that's why I am having such difficulty with this phase 5 and phase 6. So the answer to the question is phase 5 can be very short and sharp. I've shown a number of examples where that's true in the past. But then it restricts phase 6 as being very short and sharp. Why? Because phase 6 can never get above phase 4, ever. Once this line, which I'm labeling a phase 6 on this chart, goes above this line, you know it was not a phase 6. But that's a long wait to get that proof of where you are. So the better way of doing it is looking at this phase, potential phase 5 from the bottom. Where is it going and where is it finding support? So let's go back to the chart that I drew where this is a, yes.
Sorry, on the chart, there's one more question that I think is great while you're still on that chart, before moving on for 1 second. And the question was, once a price correction breaks a phase line, does that mean a new hyperwave begins at phase 1 again? And obviously, and we've been speaking about just how rare these hyperwaves are, that you found just over potentially 300. And again, if you could just answer that question, and again, if the hyperwave ends, you know, how we do start back at 1. But I do think it's a great question on the current chart.
It is. That's a very great question. You do not know when this kind of action is going on that a hyperwave is about to begin. What I mean by that is every security, every commodity, every crypto coin, every index worldwide goes through this, right? A period of time that it doesn't go anywhere. Anywhere meaning, yeah, it goes up and down as earnings come in for corporations, but it doesn't go above a certain level, sometimes for years and years, sometimes forever. Businesses go out of business. Commodity prices never get above a certain level for supply demand reasons. So just because you see a big, long, flat period has nothing to do with the hyperwave. It is required for a hyperwave. In other words, it must happen for a hyperwave to develop, but because it happens does not mean a hyperwave is going to develop. Now, if we go to phase 2, in the first example of phase 1 that I just showed you, for every one hyperwave that develops, there are at least 1,000 that have a phase 1 that never develop. So let's just put a rough number of 1 in 1,000. You find one of these on a chart of General Electric or on silver or whatever you're looking at, and you get excited because it's gone flat for a long time. You got a 1 in 1,000 chance that this is going to turn into a hyperwave. Phase 2 often happens. In other words, after something has gone sideways for a long time, generally speaking, if it's a profitable corporation or if it's a commodity where demand is growing, or if it's an index made up of country stocks where the country's GDP is growing, you get a phase 2. Now, where I said it was 1 in 1,000 in phase 1 that will turn out to be a hyperwave, it's 1 in 4 in phase 2. Once you get this kind of activity following a long phase 1 period, you've got approximately a 1 in 4 chance that this is going to develop into a hyperwave. It's still not a hyperwave. You've only got 25% chance. All you know is that this price activity is interesting because it's moving up at an angle, and every time it comes down to that angle, it finds support and moves up again. So now you're getting into the ballpark. Now it's 1 in 4, a 250 batter, which means that 3 out of 4 of these are going to break. And the question that was asked is, if it breaks, does that mean it's going to start a new hyperwave back at phase 1? And the answer is absolutely not. If phase 2 breaks at any point on a weekly closing basis, there is no hyperwave. It will disappear and something else will occur, but it will not be a hyperwave. So the fact that a phase is broken only stops the development of that phase, and it erases the potential to go higher until you move into phase 3. So now we make it 1 out of 1,000 through phase 1. Then we make it 1 out of 4 in phase 2. We're still not into a hyperwave. But now you get this third angle, steeper than the phase 2. And now your odds go up dramatically. After you get a phase 3 and you have several taps on that phase 3 line, your probability of this going into phase 4, 5, 6, and 7 goes up to about 85%. 85 out of 100 times that something enters a phase 3 following a phase 2 following a phase 1, only 15 out of 100 are going to fail. And what do I mean by fail? I mean that the phase 3 line is broken to the downside on a weekly closing basis. So the questioner who asked what happens in phase 2 or phase 3 or phase 4 when the line is broken, my answer is nothing in phase 1 or phase 2. In phase 3, if it breaks, that's the end of the hyperwave. You will never get a 4, 5, 6, and 7. Or you will drop all the way down to some other level, and maybe you will get a new hyperwave starting. But remember what that means. That means a number of years of a phase 1. And then it means probably many months or even years of a phase 2. So you don't get excited about the prospects of anything that breaks a phase 3. But let's take the optimistic view, which is phase 3 completes itself, and now you get this remarkable, exciting phase 4 line. Remarkable and exciting because you already know that you have moved through the probabilities of this thing being able to form itself, 1 in 1,000, 1 in 4, 85% of the time. Once you are in a phase 4, I don't have a single example of a phase 4, 5, 6, and 7 completing themselves. I assume that someone will be able to find one. Hopefully, I will find an example where you begin to accelerate sharply up from this angle on phase 3, and you get a number of touches along phase 4, and then phase 4 breaks, and you don't get a 5, 6, or 7. Or conversely, phase 4 breaks, and then you go all the way back up to above the phase 4 peak, which I said I've never seen before. So now we've shifted the probabilities from almost impossibly happening to almost impossibly not happening once you go from a 3 to a 4. So,
Tyler,
yes, please.
one last question. Again, thanks to everyone in the live chat. It seems as if it could be very difficult to draw these trend lines. Yeah, it works on this one as well. Can a phase 3, this is the direct question, thank you. Can a phase 3 be misinterpreted as a phase 3 when in fact it is still a phase 2?
Excellent. And that's why we're talking hyperwaves in Bitcoin, because that's exactly what's happening and has happened in a lot of other examples. Remember all the examples I've shown from the late 1800s, the 1900s, even 1960, 70, 80. A lot of you didn't live through those. I didn't start this until 1975. Luckily, that gave me the ability to see one in action, which was the gold and the silver, also a sugar, coffee, and cocoa at the end of the 70s. Remember, at the end of the 1970s, we had double-digit inflation. We had interest rates going all the way up to 15% on treasury bonds. We had money market funds at 20%, and we had inflation over 20% for a number of months until that came to a screeching halt because of Paul Volcker. So it's the only live hyperwaves and that I have lived through and used this analysis on. After the late 70s was the 1987 stock market crash, which was a hyperwave that turned into an exception. And then the Japanese stock market which in 1989 December peaked after running up 40x over the previous 18 years. And I was able to call that precisely because of all the work I had done on these hyperwaves in the previous 15 years. But then we had to wait all the way until 1995 through 2003 for the next one, which was the NASDAQ.com bubble. And during that period of time, I was managing hundreds of millions of dollars for institutions. And I began tracking very closely not only the NASDAQ, but the growth stocks in the S&P 500 and in the Dow, because they were all exhibiting hyperwave tendencies. And I was able to use this analysis to protect assets as we got into 2000, 2001, 2002, and 3. But then the only other one, and there's been two of them since 2003, was the mortgage debacle, which ended with a 50% correction in the stock market. And it also spawned another hyperwave in silver, and a potential one in gold that is still going on. So remember, when we're using these examples, all of the ones that occurred a long time ago are completed. So it's easy to draw lines in because they're done. So you just fit the model over the historical data and you can see where and how it fits. But I always ask myself, if I was living through that time as the hyperwave was developing, at what point would I draw these trend lines? And when would I know if a break of a trend like what you're looking at right now, a break of a phase 3 trend line is simply going to go back down to this phase 2 line, which would then tell you, if it holds the phase 2 line, that the phase 2, which has never been violated by definition up until that correction comes down to it, is still a valid line. Same thing with the phase 3 line that I've drawn here. I was very nervous, obviously, this week on this candle because we clearly broke down below my phase 3 line. At the time, I had that at around 6,300 and we dropped down to 5,900. And I told clients and I told people that knew that I was following this with Hyperwave that unless it turns around and closes by Sunday night, when this weekly candle closes, unless we close above that line, that phase 3 line is over and we're going to drop down at least to the phase 2 line and maybe all the way back to the beginning. And lo and behold, as I have often seen, that line coming from the top down did turn around the price. And for the last 4 weeks, we've been above it. Also note that as you go over into time, because these are all moving up at angles, they keep getting higher and higher each week. So the longer a pattern can go sideways, the higher all the lines 2 and 3 and 4 are getting, which makes it very difficult not to break them. And you need some sort of an explosion back up to the upside. But your question is exactly the right one everybody should be asking. And that is, even though this looked like a phase 4, a phase 5, maybe a phase 6, it could very well be just like we talked about in terms of this long period in which prices on Bitcoin could take a run of 500, 600, 700% in a short period of time and then come all the way back down. Just imagine for a second if what we're looking at here is simply the movement either of a phase 2 or a phase 3 that is going to hold, and the price is going to go back up and negate any analysis of about a 6, 5, 6, and 7 if we can get above 19,666. Because at that point, it swings into the favor of we are still in either a phase 2 or a phase 3 with all the upsides still in front of us. And this will turn out at some point in the future to simply be a blip along with a number of other larger and larger blips as we climb higher and higher. So, how useful then is Hyperwave if any one of these lines can be broken and you have to change your analysis at what is the actual phase line? I have found that you very rarely have to change any of these lines as soon as you get at least 3 points along the line. And in this example, I've got these 3 points. And I just pulled up this briefly because I anticipated these questions about at what point do you feel secure in the angle of each of the phases? This is the possibility of a developing hyperwave in Tesla stock. And we showed this to those that were watching on a couple of occasions before. But here I've drawn in a phase 1, 2, and 3 line. But I did it because Tone Vase, when I was first explaining this to him, said, back here, I would have drawn a phase 2 line in that looked like this. And I answered that I would too, because that would be logical. Here's your phase 1 that lasted a number of years from the beginning of Tesla all the way until the middle of 2013. Then we had this explosion up. Well, now we've gone from 1 out of 1,000 to 1 out of 4 with this acceleration. But where do you draw the line? Well, this angle, I happen to know, looked to me as being too sharp to be a phase 2. But it's a logical place to draw it. And I remember back when I was looking at Tesla in 2013 going into 2014, I drew that line in. But then remember what I said, that it doesn't matter how high prices get above a phase line. The only important thing is that when a correction takes place, it comes back to that phase line. So I would erase this phase line, first of all, because it was violated right here. And I would wait to see if there is another stopping point, maybe over here, in which I could draw a phase line that had 1, 2, 3 points on it. That could be a phase 2 line until right here. It broke it again. So now I've got to wait longer. And what happens is it comes down right to that phase line, and then we accelerate up. So the way I develop the phase lines is I know the approximate angle. This approximately should be less than 45 degrees. This one should be approximately greater than 45 degrees. And we know that this one cannot be a smaller angle than this one was. You can't have a phase look like that. It's got to be greater. So how confident am I now that this phase 3 line is correct? I'm not confident at all. Why? Because we've only got 1 point on it. And I've got an extension of this phase 2 line that I would love to see have another point on it so that we are still in a phase 2. All we know is if the price drops below this line, this is one of the 3 out of 4 times that a phase 2 fails, and you would expect it to. If this continues on this year and into next year, and we accelerate up from it and come down and touch it 2 or 3 times, now we've got a phase 3 with confidence, and we have just moved from 1 out of 4 to 85 out of 100 in terms of completing a hyperwave. So I wanted you to see this chart to understand that as the actual development is taking place, you must be flexible in your understanding of what is going on. Now, before any of you had heard of a hyperwave, if you see something going up and you're a trader or a speculator, you buy it for whatever reason, fundamentals, momentum, the sequential trading system, whatever it might be, not knowing anything about hyperwaves. So you're not restricted in any way by using hyperwave as a technique. And the longer it takes place and the more obvious it becomes that this is tracing out these type of angles that keep getting stronger and stronger, it will give you very powerful evidence about how and when you want to make decisions in whatever it is that you're looking at. Now, I'm not going to go into 4, 5, 6, and 7. We are going to keep those for another vlog. We're already running kind of late because there were some great questions, and thank you very much for those. What I want to do right now, and sorry to cut anybody off, please send us all of your questions, your observations, examples that you have seen. I'm going to start tweeting out some things that I am interested in terms of the research side of hyperwaves that I'm going to need a lot of help on for a lot of reasons having to do with available data. For example, for the Japanese stock market and for various NASDAQ stocks during the dot-com bubble. I've already got a lot of information about some back in the 20s and the 1930s, as you see. But with all of these ears and eyes and intelligence looking at all of this explanation, I know I'm going to get some tremendous responses that will help me understand better the details of this rather amazing chart formation. Okay, I'm going to turn now, and we will only take about 10 minutes to talk about what is going on right now with Bitcoin. And you have heard me over and over again talk about what I believe to be these two very important lines, horizontal trend lines, having nothing to do with hyperwaves. This is just traditional analytics. But this 10,100 line and 11,100 line have repeatedly, as you go back into the development of this move all the way up to 20,000 and the drop all the way to 5,900 and the recovery back up to where we are today, have been very helpful tools for me to understand where we could run into support from the top and resistance from the bottom. And I will just, for those of you that have heard me drone on about these two lines, I just want to repeat that before we ever got above the 10,000 level in the history of Bitcoin, we ran into this brick wall on 4 consecutive trading days on our way up to 20,000. And if that weren't enough, another line began to develop $1,000 higher at 11,100 that did the same strange thing in terms of either being a top or a bottom of daily action for a total of 8 different days before these 2 explosive up moves in terms of these candles that took us all the way up to 20,000. Coming back down from 20,000 all the way down to 11,000, 11,050 to 11,100 on this line, we found support and we found a reversal candle. And then we found support as we got near it on a second attempt at a correction. And then again on the third attempted correction down, we were stopped right on the 11,100 line on 6 consecutive days. 3 of those days came down to the bottom line of 10,100 and rejected, found support and rejected the downward movement until we finally broke it. And these 2 lines tell a fascinating story about the supply and demand relationship above the 11,100 line and below the 10,100 line. We are now trying from the bottom, from the 5,920 low, to retake these lines. And we spent 4 days and then a 5th day and then a 6th day trying to keep between them. We couldn't get above the 11.1, but we wouldn't fall below the 10.1. But then for the last 5 days, we couldn't get back to the 11.1. We hugged the 10.1, both in terms of high, lows, and closes until today. That's why all of my tweets this morning to me are very important to me, because what we're doing now is we've got lows above the 10.1, but we still have highs below the 11.1. But we've broken free in between them for the first time, really, since these 2 candles back here, 7 and 8 days ago. So we started to pull back earlier. We had gotten up to 10,850. I'm going to go to a 1-hour chart. We got up to 10,850, and then we began a pullback. And I listened very closely to Tone Vei's explanation of the sequential trading system or the random number generator or the TD system when it comes to these turning points. And he was worried earlier today that we had just seen on a 4-hour chart a 9, and he thought that we were in for a 1 to 4 candle pullback. And I agreed, although I will lean to his interpretation over mine. But I agreed, and so I tweeted out, it looks like we're in for as much as a 16-hour pullback, 1 to 4 candles coming down. And mentally, I was hoping that if that were to occur, it would stop at my 10,100 line. Now, look what's actually happened. We turned around the next 4-hour period. And now, in this 4-hour period, we have actually got a high above the previous high and a high above the high of that red candle. I will be very interested to hear Tone's interpretation of what I perceive as the strength of this last 2 4-hour candles. But as we sit here, let me conclude. Number one, we are in a downtrend still from the top at 19,666. We have a good looking bottom at 5,920, which happened to turn around on one of my hyperwave phase lines. Number two, we have worked all the way up to 11,780, clearing both of my resistance lines of 10.1 and 11.1, but we could not hold it. And we were rejected all the way back down below both of them. We are trying again. We are now in the middle of this area. We had a sell signal on the TD sequential random number generator system that looks to me like it's fizzling out. It could very well be that we're forming a bullish pattern here to take another run at 11.1. So I have tweeted out earlier today that it is possible, and I will turn very bullish if that is the case. If we can close above 11.1 and then close above 11.780, I believe that we are on our way up to the peak at 19,666 with a couple of stops along the way. But I think the bulls will be back in charge. And it will, if that occurs, establish the fact that we're still in a phase 3 of the hyperwave with a number of months or years to go of phase 3 before it accelerates up into a phase 4 with any projection you want to put on it at that point. We've got a couple of people following us that have sent me some great interpretations of hyperwave along with their own analysis, assuming what I have just said to you all is close to being correct in terms of projections up into the same numbers that you've all seen at 100,000 or 200,000 or 300,000. So a lot of stuff today. It took too much time to do it. I hope the charts were clear for you. And we love to interact, both on the criticism, both on the questions, and both on observations that you want to make. We will try to get to everybody as quickly as we can. And with all of that, thank you, Leah, for hosting this and the great questions that got me back on track. And with all of that, I will turn it back over to Leah.
Everyone, thank you so much for the incredible questions. I've taken note on all of them. And Tyler and I are going to absolutely answer all of them and talk about them in the upcoming vlogs. Some really fabulous questions. Additionally, as Tyler said before, if you spot some hyperwaves and want to send through, that would be awesome. It seems as if people are really picking it up quite quickly. It's very impressive. So on that as well, I did see some questions coming through about Gbtc. We will continue to talk about that. Yeah, until next time, this was good fun. And everyone, thanks so much for watching this one. We'll start doing the live broadcast now and moving forward.
Great. Thank you, everybody. Bye-bye.
Bye, everybody.